After the range-bound moves that we've seen, today seems like it could be another range-bound day. Some amount of uptick. The SGX Nifty is up about 27 odd points. But let's tell you about the list of stocks that you can watch out for as we head into trade this Friday morning. Anuj, what are you looking at today?
Sonia, I'm going a bit contra today. And this is not the first hour call, but for the second half perhaps. I think Infosys, my base case is extrapolating TCS. Today could be a bad trade. The focus in last hour would be on the dividend, buyback, and there could be some differentiation. So that's technically the stock is poised better than TCS. That's I'm looking at the data. It's I want to respect that a bit. The other is Tata Motors DVR. I think for last 4 or 5 days we've been talking about how Tata Motors, even if it's a bear market rally, it is a bear market rally, and at some point, of course, it will fizzle out. But bear market rallies are powerful, and you should trade them. The stock's done well already. The DVR could outperform after a 3-day rally in the main stock. So that's something that perhaps you would have on your radar as well.
Okay. And then the inevitable TCS, Rima Tendulkar on the fine print, on the key takeaways. Rima.
Hi, Lata. Well, there is a margin miss, and that's a reason for the stock, for the people to be disappointed in TCS this time around. Margins have missed on account of cross-currency headwinds as well as a higher cost of doing business. So we have seen an increase in the subcontracting costs. They've hired more people locally, as a result of which the on-site costs have gone up. So margins have come down to 25.6% versus 26.5% lower than estimates. CLSA has cut the margin estimates not only for FY19, but all the way till FY21 by 50 to 70 basis points. The other parameters like constant currency growth, the deal wins, the BFSI numbers are looking good this quarter. Kotak has lowered the target price to 1825 versus 1950. They have a reduced rating on account of stretch valuation. CLSA reiterates its buy call on account of industry-leading growth, but they too have cut the target price to 2460. The key from here on is whether FY20 revenue growth for TCS can accelerate from FY19 despite the macroeconomic concerns that are surrounding it. And secondly, this higher cost of doing business, is that going to erode into the margins, not only for this year, but even for the coming terms? Is this going to be a structural issue for the company and for the industry? Is something that we need clarity on.
Okay. Thank you very much, Rima. I hope you're noticing, all of you, that Rima is in a different backdrop. This is not the CNBC studio. She is actually at the TCS boardroom, where V. Ramakrishnan, Ajoy and Pratik Pal will be speaking to her in a few minutes from now. And thereafter, of course, Rajesh Gopinathan as well, the CEO. So that's why Rima is at the TCS boardroom.
All right, well, that's about TCS. But Lata, the margin miss, you think it could have a rub-off on other IT stocks today?
Would. See, I defer to Anuj's opinion on Infosys, but my sense is that overall IT stocks should have a bit of a shudder today. At least you can't see people rushing in to buy these stocks. They would at least want to watch and see what they report. So I would assume maybe if Infi is technically differently placed because of a buyback, so be it. But others like Tech Mahindra and Wipro and HCL Tech and the IT, mid-tier companies should have a bit of a sentiment negative, also because the dollar is weak, which means the rupee is going to strengthen a little more. You saw the rupee end 5 pies stronger yesterday. If that also continues, there is no immediate compelling reason to go long on IT.
Okay.
That's fair enough. As we discussed, finally some good news for Tata Motors after a long time.
Yes, in fact, you know what? The sales are still down, but they are not as bad as what the street was estimating. So this is the December retail sales for Jaguar Land Rover that we're talking about. The JLR sales have fallen 6%, but it is not as bad as the 51,000 units that Nomura and a couple of other brokerages had predicted this time around. Now, the China slowdown continues and the trade tensions have hit consumer confidence. That's what the management says. But the good part is that most markets did well in December, ex of China. So North America is up 21%, UK is up 8%, Europe is up almost 8%, but China is still the big laggard. It's down 42% this time around. Also, there's additional good news. Jaguar Land Rover has decided to cut 4,500 jobs as part of its £2.5 billion cost-cutting program. So that, of course, will mean positives for its operational performance. And the stock is trading now at 3.5 times FY20 EV to EBITDA, which is at the lower end of its historic trading range. So there is some legroom in terms of valuation as well for Tata Motors. As we know, the stock is already up about 8% in this month.
Okay, well, that's good news. And Tata Motors has been having other technical issues also supporting it. Okay, the 4 PCA banks. Now, just to remind you, prompt corrective action. 11 banks are under prompt corrective action. What Reuters is reporting is that the Reserve Bank is not going to remove them anytime soon, but they will wait for their Q3 numbers before removing. I mean, this was always my suspicion, but now that it's a Reuters story and sourced to an official close to the issue, this now becomes almost in the public domain. The Board of Financial Supervision met yesterday and looked at the Q2 numbers and picked up the usual suspects, 3 or 4 banks that may qualify for coming out of PCA, but that decision itself is going to be taken only after the Q3 numbers. So maybe you have to wait for a month or so, or at least 4 weeks before Bank of India. Those are the people you think, because they have single-digit net NPAs, not below 6%, which the Reserve Bank wants. So BOI, OBC, Corporation Bank and Allahabad Bank, the 4 banks with 10% or lower than 10% net NPAs could qualify, but not anytime soon. You have to wait for 4 weeks, and it will depend on their performance.
Okay, so we'll keep an eye out on these banks. But let's move on. In the oil and gas space, ONGC is on our radar this morning. Sonal joins in to tell us why. Hi, Sonal. Morning.
Good morning, Sonia. Well, one of the arms of ONGC, that is ONGC Petro Additions Limited, has won an international award against Daelim Industrial Company, which is a Korean company. Well, back in 2011, both of them had entered into a contract, and the contract value was around 1,500 crore rupees. And the South Korean company actually terminated the contract, and ONGC Petro Additions Limited, that initiated an arbitration award for cost escalation, and they expected the cost to have gone higher to around 20,000 to 30,000 crore rupees. Now they have won this award, and they will be getting some compensation for that. While the compensation will be decided in the next hearing, the compensation as per the agreement was capped to around 20% of the total cost, or 1,500 crore rupees. So definitely company will get around 1,500 crore rupees, and that is a positive coming in.
Okay, thanks for that, Sonal. And Sonia, the newspapers are reporting something seminal in Eveready.
Yes, Times of India has reported that the promoters, BM Khaitan, the group is looking to sell Eveready. Now remember, the battery business of Eveready has been loss-making for a while, and they are looking to restructure the business in order to pay off their debt. So the promoters own a little over 44% stake in Eveready currently, and reports indicate that Kotak Mahindra Bank has been mandated for the potential sale. Now, the asking enterprise value is in the range of 3,000 to 4,000 crores is what the report is suggesting, but the current EV of the company stands at around 1,650 odd crores. So I'm expecting the stock to open in the green, because of course the promoters will look to sell at a premium. They are also looking to perhaps induct a strategic partner into the business by diluting their stake. That could be the first option. We did try to reach out to Amritanshu Khaitan. He of course said that there is no truth to this story, but we will try and do further due diligence to see if there is anything progressing in this. But for now, I expect the stock to be in the green.
Okay. Well, let's get to other stocks in news. Anisha?
Oh, well, yes, Lata, I'll start with NBCC because that one has bagged orders worth around 187 crores in the month of December. Well, yes, the pace of order booking has slowed down, but do remember for this company, the problem is execution and not really the order booking. Moving on to Lakshmi Vilas Bank, wherein reports suggest that the bank might have to make a provision of as much as 3/4 of the fundraising plan of around 2,000 crores, and that might just dampen the investor sentiment a tad bit. So there might be a red tick on that one. Moving on to Lemon Tree because they have signed one of the agreements to set up a 50-room hotel in Andhra Pradesh, so that is a sentiment positive. And lastly on HFCL because they have bagged an order worth over 500 crores, so that should see a green tick. Back to you guys.
Thanks a lot. There are some very interesting brokerages as well this morning. Sonal has put together that list for us. Sonal?
Good morning, Sonia, again. And well, I'll start with Bandhan Bank. Macquarie has written on Bandhan Bank, and they have cut the target price by 25% to 400 rupees per share. And they've also downgraded Bandhan to an underperform. They think that the acquisition of Groo was very expensive, and that raises capital allocation concerns. They also expect the stock to underperform despite the strong fundamentals that the bank has. They also think that multiples will be under pressure till promoter stake sale issue is sorted. So that is something coming in from Macquarie on Bandhan. Merrill Lynch has written on Bharti. They have downgraded Bharti to a neutral. They think that they see further risk to consensus downgrades. And why do they think that the growth will be slower than expectation? That is because they do not expect any further tariff hikes by the company. Also, the full impact of IUC, that is interconnectivity charges, that will start trickling in the books of the company by FY20. That will have a negative impact. Lastly, CLSA has raised target price shares of Godrej Properties 2024. They think that this company is the biggest beneficiary of consolidation led by RERA, and they also think that the launches that the company has been able to do despite a very weak real estate market, that is very positive for the company. Back to you.
Okay, thanks a lot. So here's a quick recap in case you missed out on any of the stocks. Our top stocks in focus this morning with positive news flow. First up, Tata Motors DVR, ONGC, Eveready, NBCC, Lemon Tree, HFCL, ITC and Godrej Properties. While stocks with negative news flow this morning, TCS, Tech Mahindra, Wipro, Bharti Airtel, Lakshmi Vilas Bank, the whole lot of PSU banks, Corporation Bank, Allahabad Bank and of course Bandhan Bank could be under pressure as well.